And I mentioned at the top of the program that today is July the 14th. Now, I did not know that today is actually National Tax Day.
Should I say Happy National Tax Day?
I guess so. Maybe for some of us, it'll be happy. So, Alan, could you remind our viewers why it is that we pay our taxes?
Yes, Paul, because it is our obligation as law-abiding citizens.
That's right.
A good one.
That's right. And these taxes are going to a good cause back to our lifestyles as well. Now, I don't know if you guys have heard, but there's actually tax planning. So apart from paying our taxes, we can also plan our taxes to optimize our assets. So let's find out more about this as we are now joined by our resident financial planner. Welcoming back to the studio, Meta Anggriani. Good morning, Meta. Thank you for being here today.
Good morning, Ali. Good to see you. Good to see you.
Let's talk a little bit about this. We all know about tax paying, but what is tax planning?
Well, tax planning is actually part of financial planning. I mean, like when we talk about the individuals, the individuals' financial planning. Because, when you talk about financial planning, it's actually your goals is to maximize your assets, your wealth, so that your money can work for you to, to buy things you need, to fulfill your needs and purpose, right? So, but, in here, I mean, like wherever we are, I mean, when we have income, there is a tax. When we have assets, there is a tax. So we want to maximize our income and our returns, but how to minimize the tax, the expenses, so that we can gain the optimum amount of assets during the long term, right?
So like basically not just leaving it till like that one time of the year, but planning ahead of time so you kind of know how much you're going to pay?
Yeah, right. We know how much we have to pay and you know what kind of assets that is giving you a maximum return. Right. Because you calculate the tax as well, not just the risk and returns, but also the tax. So you have in finance, you have your portfolio of assets to diversify your investment. The idea is to manage your risks, right? But from the point of view of tax, we can also, optimizing the tax expenses. So it's not just minimizing the risk, but minimizing the tax as well. So it's getting more comprehensive.
So we want to try to get that number as low as possible using whatever assets we have, or if we have tax write-offs, things of that sort, right? So we can, that hit once a year won't be as big as we expect.
Well, yeah, the idea is to make it efficient, but still complying to the tax regulations.
Got it.
Yes, just like when we have a talk show with Kang Denny Ridwan, he mentioned, right, like the tax. If you put your money in the government obligation, government bonds, the tax is lower by half, right? So 10% instead of 20% if you put it in a bank deposit, time deposit, right? So what factors should be taken into considerations in terms of tax planning?
Well, from the personal finance view, well, of course, we see the tax subjects. The tax subjects is individuals, and the tax objects is normally we talk about the incomes and the assets, right? So that's why we have to identify first what is our income. Do we have regular income, or if we have a freelancer, we have irregular income. How many incomes we have? Because if we have different employers, multiple employers, it's getting more complicated as well, the tax, right? And of course, there is the size, how much income that we have in a year, because there's a tax bracket that we have to follow, right? So after we know the tax objects, then we have to understand the tax regulations as well, yeah? Because again, we know the tax bracket, we know what is the tax deductibles, and we know when we have to pay the taxes, and at the end, how to do the tax filing. Those are the regulations, right, that we have to understand. But with all of that, then we can understand, as individual, how much do I have to pay taxes? When do I have to pay taxes? Maybe we can budget it as well, right? Of course, if we have income tax, maybe if we work, as an employee in the employer, it is paid. It is withheld by the employer and paid by the employer. So at the end, we just do the tax filing. But there are other types of tax maybe implied to our asset, like for example, the land and building taxes, right? So you have to pay in a year, or have to pay the annual tax of your house, your cars. So you have to understand how should I budget it.
Got it.
So it comes to very
assets, yes. So when do you think we should consider, okay, I'm going to handle my own tax, and when do I need professional help like tax consultant, even though we act as like personally, like individual?
Right. I think the idea is that we have to pay the taxes as per regulations, right? The problem is, I think, because the tax regulation is so complicated, so not many of us can understand the requirements, right? So again, if we work only for one employer, it will be easy to file the tax.
Sure.
But again, if we have multiple employers or multiple incomes maybe coming from abroad, the cross-border taxes, that will be much more complicated.
Passive income as well counts as well,
Passive income and other things, you know, like if you have mixed marriages, if you marry with other nationalities, that will be complicated as well. So I guess it depends on your level of the complication of the tax.
And how much we understand about how to do it, right?
Right. So it's easier to pay the tax consultants for helping you out, but again, it depends on how complicated your situation is.
Whether or not we need it. Now, you mentioned about complying with regulations. So what sort of ethics do we need to know when it comes to taxes?
Well, yeah, the thing is, as I mentioned, we have to comply with the law, with the regulations, right? So that's the highest ethical that we have to follow. But so the thing is, since it is complicated, we have to really understand. So if we understand, we know actually which part of we can optimize in the tax, right? So we can have a different kind of tax strategy, you know, like when you want to make it efficient, but is there a possibility to make a tax avoiding, but still still complying with the law?
Right.
So that's why, or maybe, is it possible to make a deferment of paying the tax? So those kind of things that we need to look into it. It's not violation or it's not the tax evasion, but it's something that is more manageable for us to manage our money.
Okay. Are those things possible as well, like deferment and things of that sort?
Well, for individual, maybe it's not so much, but when you talk about the corporate tax planning, that will be much more.
I mean, we're talking bigger numbers as well, right?
Bigger numbers, bigger complications, bigger exposures.
Okay. Well, let's expand a little bit more on that. You mentioned a couple of times about optimizing your wealth. So how does asset selection play into this? Like, how do our assets play into our taxes?
Oh yeah, that's quite instrumental in this personal finance, right? Because you know when we work, we have income and we build assets, and so we want to grow it, right? So yeah, different types of assets, they have a different tax rate.
Okay.
Like for example, if we talk about bank deposits, maybe the tax is 20%. And it's not just about the rates, it's about the types of tax as well. You know, there's a final and non-final.
What's the difference between those two?
No, if it is non-final, it means that your income, you have to calculate it for a year, and then at the end of the year, when you're filing, you recalculate.
Okay.
Because, like for example, in the beginning of the year, you have this kind of amount you have in the tax, simple tax bracket, and then at the end of the year, since your income is high,
you're
accumulating, right?
Okay.
So that's the non-final. You have to calculate within a year, and then you calculate the final one and you pay.
At the end.
But there's also a final tax, means that like for example, if you acquire an asset, you have to pay the taxes upfront. But you don't have to pay it anymore unless maybe you sell it or something like that. So there is a different types of final and non-final and especially the rate as well. So if you know about it, you know actually is it okay to always report your assets to your income tax filing? So when I talk to my friend, he's a tax consultant. The problem with individual is that we don't report our assets because we are afraid that
I don't want to pay the tax on the house. It's huge.
But actually, not all assets will be accumulated like asset, you know. So actually, it's okay to be reported because maybe we have already paid it and it is already final.
Right.
The problem is maybe we don't keep the transactions records.
So your suggestion would like fully disclose all of our assets?
Yeah, but I think I could use the example of like a house, right? Like if you purchase the house, that time you purchase, you have to pay this kind of sizable tax amount for the purchase.
For the transactions.
But then once a year, you're paying an amount for the property tax, which is actually quite low considering like it's a yearly thing, right?
So that's why we talk property, but there's a lot of tax on the properties, right? Since your transactions and then the land and building taxes, not to mention if you have to transfer title of the
Yes, the
ownership,
deed.
those kind of expenses.
Everything has a tax on it.
So that's why people get overwhelmed
right?
with the
Yes.
taxes.
see.
That's why we need tax planning and tax budgeting as well, as you mentioned.
Yeah.
And then what other problems that may emerge from tax planning?
For individuals specifically.
Yeah.
individuals.
Again, I guess the problem is because we don't maybe understand the complication of the tax. Then we don't pay tax not because we intend to, but because we didn't know.
Yes.
So that would be a problem, right?
Yeah, some people say, I'm okay paying tax, but I don't like the way I should report.
Right,
tax
right,
filing.
right. Well,
You feel guilty, didn't it? We're like, I have to report everything.
right, yeah, and so there's also the complication of making a tax filing, right? So and and sometimes even though it is already socialized that by the 31st of March we have to complete the filing, but still people tend to postpone it at the last minute, and then the system crashes, and then everything goes.
Because everyone's doing it at the same time.
and then you have to pay the penalty as well. So that complication makes
Yes.
us very overwhelmed. So I guess the problems might occur because first we don't know about the tax, and when we don't pay it, is it really a violation or because we didn't intend to? When I think a few back years, the government has the tax amnesty program. Maybe that's the idea of making people more aware
Right.
of how the tax can be used for maximizing your assets.
Right.
So I think that's quite a problem that might happen, and a part of this complication.
Yeah, definitely. Now, speaking of complications, all this time we've been focused about individual tax planning, but you mentioned how corporate tax planning can be much more complicated. Could you explain the differences between?
Well, yeah, because when you talk about the corporate tax, I think the tax object is not just about the income, and the assets. There's also a value-added tax because, when you produce something, you have to there's a value added that will be
Yes.
taxable as well.
Right.
So the tax objects will be much more complex. And of course, you're dealing with, different industry has a different regulations as well.
Okay.
And I think part of it, when we talk about individual, when we get income, then there's some tax deductible, and then we have
Yes.
taxable income.
Yes.
In business, because there's a value-added tax, we have to. There's an income, your offset, your sales, but then you can deduct the expenses, the operational expenses,
Right.
So there is a net profit. It is taxable. So again, for business, then you have to be very careful with the operational expense. Which one is taxable, which is non-taxable.
Okay.
So I guess that's why people tend to. Oh, I guess if I build a corporation, we can pay less taxes. Well, maybe, but still the objects are many as well. So
Right,
so it
okay.
will be more more complicated as well.
Well, my sister actually is a high-level accountant specifically for corporate firms, and they have to bring her in whenever it's like tax time annually, and she's basically like a freelancer that does this because it's so complicated that they need like specialists to come in to do their taxes, not even somebody from the company.
Yeah, and from the corporate point of view, it is since we talk about your entities, right, business entities. So it's not just about the number of the tax, but we talk about the legal side of the business.
Right.
So the tax consultant should represent the companies in the court if anything
Best interest.
happens as well.
Indeed.
So, yeah.
There you go. So I hope you're more in the know now in regards to tax
Yeah.
planning, because I guess it's not something that we should be fearing if we are more prepared. And one way to be more prepared is to plan yourself
Yeah.
throughout the
Remember that the goal is we as individuals, we want to maximize our wealth. So
Right.
we not just accumulating the wealth, but we manage the expense, including the tax expense.
as low as
as
possible.
efficient as
Part of financial planning.
I like
as you
that.
mentioned. Yes.
Thanks so much, Mameta. It's been
Thank
great to
you.
have you on again. Always
Yeah.
happy to have you here in the
Well,
studio.
thank you for the
Yes,
discussion.
talk to you later. So